How much did you roll into the live account?
$28,999, so almost $29,000. One thing that I realized is delayed gratification is really the key to being successful in prop firm trading. My highest grossing month was in February of this year, and I made $37,000 in payouts. You know what's crazy? I think for me personally, I've lost so much. It's like a constant reminder of one, the lowest point you ever been in, and two, to understand that all it takes is one day, one trade. I spend maybe, now I think about it, first I thought it was like 24, but I think I spend close to $30,000 a year on coaching.
Traders, welcome back to the podcast. I've got a very special guest. Maybe you've seen him last week. Lawrence, the investor, is back, buddy.
Yeah. What's going on, man?
Good to have you on the podcast.
Yeah, bro. Good to see you again, bro.
So this is Lawrence's first solo podcast, everybody. I think the panels that we did in Miami smashed it.
Yeah.
I just didn't have the energy in me, bro, to do that fourth podcast
Bro,
with you
you're
that
a
day.
machine, brother. Like a machine. You did like 4 of them back to back, and I came in late.
We were
just running through them.
We were gonna do it in person because Lawrence is from Fort Lauderdale and we were in Miami. Yeah. But I was just like, bro, can we just go eat and like just go chill? Especially because we were out a little late the night before. But we still made it happen. Instead, Lawrence flew over to Tampa for this so we could get it done in person, which I really appreciate, bro.
I had to, man.
So this is going to be good. Now, if you don't know who Lawrence is, we're going to kind of go through your story a little bit.
Of course.
Instead of starting with like the traditional, how did you get started trading?
Yeah.
I want to intro you a little bit, and then I want to jump in with where are you at right now with prop accounts, live capital, all that stuff, and then we'll get into the story.
Okay.
But I was connected to Lawrence through Tanner. So you and Tanner have been friends for about 2 years, and now together are the Strong Trading coaching program, the Strong Trading business, really, because I know Tanner's got merch now you guys are doing and everything. I think he sent me an I Love VWAP shirt, bro, and he wants me to wear it on stream tomorrow.
As you should.
I will.
Yeah,
I will.
It's a good show.
I told him, I said, if you send me 2, I'll turn one into a belly shirt and wear it on stream. So Tanner and Lawrence are now rocking together. Coaching program is stacked. You guys really, I think, built this program quickly because of the success together, but also separately that you've had. Everybody knows Tanner's been taking payouts. They know you've been taking payouts. So when they see 2 good traders come together like that, people get super excited. For sure. So before we get into how you handle prop trading and all that stuff, the payouts you've taken and everything like that, talk to us about the goal of the coaching program with Tanner. What are you guys looking to do? Because there's a lot of different trading education companies and people and brands out there. How is the Strong Trading Company going to be different?
So what makes us different is that we're here to build consistent traders. We normally only accept traders that already have experience because we don't want to, start out with beginner traders because trading is such a crazy game, bro. Like you actually have to trade 1 year by yourself to see if this is what you really want to do because the first couple of years, as you know, you start hemorrhaging money. So it goes beyond the money, right? This has to be a passion, right? Yeah. So the main focus and our main mission is to make traders consistent. Is not to make perfect traders. We're not sitting here trying to tell you that you're going to make X amount of payouts per month. We're here to make consistent traders by teaching them the back-end process. We hone in on psychology because psychology is hand in hand with consistency. So if you come with your setup, like if I give any trader my setup, they may not be able to perform it. Right? Like I know my setup is profitable. My setup is actually very highly profitable. But if your psychology isn't right, if you're not consistent, if you don't have any type of emotional intelligence, EQ, then you won't be able to perform on a consistent basis and be able to see the probabilities play out so you can start getting those payouts and making those returns that you're looking for. So that's what we focus on. We focus on somewhat experienced traders with the setup that they already have, and we focus on their mindset, their mentality, their consistency, the back-end process, the journaling, all of that.
Let's get into that later. I think I want to talk to you about how you coach traders on that process, right? Because that's a very buzzword thing to say, trading psychology and discipline and mindset. But like, I'm sure there's tactics that you guys have through experiences you've probably gone through that you now share with these guys. So we'll come back to the coaching. So that's good. I like the answer to how you mentioned you're not looking for new traders specifically. You're looking for guys that have kind of figured out that they're passionate about it and you want to take them to that next level. So we'll maybe crack into some tips today too. But let's get into the prop stuff first, because I think a lot of people right now, prop firms are just super hot, bro. So tell everybody what you're doing. I know you got the Topstep Live account. I know you got the Blue Sky.
Yeah.
Okay, so you break it down for us.
I'll break it down. So
traders, Real quick, a pause from today's podcast to thank our first sponsor, Top One Futures. You've probably heard about them by now. Top One has been a sponsor of this show for over 2 years. We've got a link in the description that's going to save you over 35% on any challenge with Top One Futures. Just use the code ASFX and that'll save you the biggest discount that they're offering at the time of you watching this. Big shout out to Clay for being here and also for helping us make this podcast happen. A big thank you to our second sponsor, TradeZella. If you're not tracking your trades, you're falling behind. I can save you on the monthly plan and the yearly plan, whichever works better for you, but we would highly recommend that you start tracking your trades today using TradeZella. I'm a big fan of Umar. They have been nothing but supportive and helpful to me and my community, so we want to save you guys money and we want to get you tracking today. Use the link in the description and you will be able to save either 10% or 20% on your monthly or yearly plan. Now let's get back to the podcast.
Basically, I started trading Apex when I first started out. Actually, Tanner brought me onto the prop space. I was trading options my first 3 years. I recently just got to the prop space the past, I would say, 7-8 months. But because of options in the Greeks, options taught me how to time my entries very good because the contracts, if the contracts lose value, bro, then it doesn't matter if the underlying stock goes up or down or if you're right in the direction.
You still lose money.
You still lose money. So that timing helped me out when I transitioned to the prop space.
Okay.
Now, I started out with Apex, blowing accounts like crazy. The whole 20 accounts, copy trading, $200 is $4,000. And after I started blowing so many accounts through Apex, I took a step back. I found Topstep. I told Tanner about it. He was like, yeah, Topstep is a good prop firm. Started looking into it. So I've been trading Topstep majority of the time, majority of the 7 months, 8 months that I've been trading props. Recently, last month, I became a live funded trader through Topstep.
That's
yeah,
awesome.
Man. Yeah, it took me about 3 months, but yeah, I did it.
How much harder is it trading live with the prop firm than it is trading on their evals and their XFAs?
It's actually, in my opinion, I think it's easier.
Yeah?
Yeah. So the thing is, when you're trading evals, right, or the combines, or even XFAs, they recently added the risk settings to, the Project X thing. They recently added that, right? And that helped out a lot. Now, with the live funded, it's actually funny because they start off with a daily max loss for you. So my daily max loss right now is only $1,000 and they cap me at 5 micros. Now, I can call the risk manager and let them know, like, hey, give me some more leverage or can we negotiate or whatever the case may be. But since I just started, I'm sticking to that, and I'm just, taking it step by step, filling everything out.
So it's interesting.
Yeah.
They limit you more.
They limit me more
in the live to protect you almost. So you're saying that Topstep does a good job at that. Yeah. That makes sense.
Or maybe protect themselves because, I'm trading a live market.
How much did you roll into the live account?
$28,999, so almost $29,000.
So it's crazy to me that they let people roll that much money from sim accounts into live capital.
Yep.
But that is the opportunity with prop firms, some of them that do that. That is crazy, isn't it?
Yeah, I will always recommend anybody, if you start taking payouts, you need to take a portion of your payouts and put it into some type of live account. You want to have your ownership, right? Because whenever you sign the agreement, technically they can, forfeit any type of profit that you have, your accounts at any given moment that they want.
Right.
Or Lord forbid, if the prop firm goes under, then you're screwed.
Right.
So any payout or any type of capital that you get from them, you need to have your own personal live account as well.
Do you think that a lot of traders are not doing that because they are blind and think that the prop firms are going to be around forever? Because the way you're saying that makes me feel like you're seeing people not do that.
Yeah, I will not see people not do it, but I don't hear people talk about it enough.
Specifically taking prop firm payouts and moving it into their own account.
Exactly.
Well, it's interesting because now as I think more successful traders take payouts, because it just seems like more and more there are people figuring out the game and figuring out how to get payouts.
For sure.
Maybe that conversation comes up more often.
It needs to.
Do you think that strategy is a factor that leads to more or less payouts?
I would say that on the option side of things or the live side of things, but for props, I don't think so. I think it's the psychology piece.
Yeah.
I think that when I traded options, I could have been a little bit more lenient with my rules and the emotional control that I needed. But on props, I think that your psychology and your emotional intelligence need to be A1. It was a huge difference on the transition.
Interesting.
If you can be a prop firm trader and be successful, anything else is going to be easy for you. Like, you really have to be on the top of your game. And I genuinely think it's because I like to compare prop firms to like casinos to a degree, man, because they do little things and little nuances to kind of trigger your emotions that I also don't really hear people talk about as well, right?
Like
So,
what?
you know, in the casinos, right, there's no clocks,
Nope.
there's no windows,
Nope.
there's like a fragrance in there to keep you
Fresh
going. Fresh oxygen, right, to keep you in there, and you don't know how long you're doing it. So these little nuances, these little tactics, right? But for the prop firm space, they induce a lot of short-term goals, payout chasing, like $200 or more, 5 non-consecutive days. So now everybody's focused on that instead of trying to become a live funded trader. The key to being a successful trader is to have long-term goals, but now they're giving you these short-term goals, causing these emotional volatility because we're all trying to be great, right? So if you sit here and you tell me I need to make $200 or more, 5 non-consecutive days, I want to make $200 consecutively to get to that payout, and I don't want to mess up. I don't want to miss a day. I want to get there as soon as possible.
100%.
And guess what happens when you have a red day?
Blow up.
Blow up. You're going to go on tilt, man.
Yeah.
So it's just the policies, the rules, and the consistency rules. Like even for me, whenever I have to deal with consistency rules, I have to ignore it. Right, I have to ignore it. I got to be willing to continue to trade, even for the payouts. Right. One thing that I realized is delayed gratification is really the key to being successful in prop firm trading. Ooh. Like if you have,
hold on, say that again. That was a good one.
Yeah.
Delayed gratification is the key to success in prop trading.
Exactly.
Okay, why?
Because, for example, I noticed when I was chasing those payout policies, right, those payout requests, $200 or more, 5 non-consecutive days, I would take the payout, and then I guess I would feel some type of achievement, but then I would chase the next one until I eventually tilted and lost my account.
Sure.
But I switched over. So I was like, okay, you know what? I'm going to take one payout per month, right? My highest grossing month was in February of this year, and I made $37,000 in payouts, right? And it was because I took one payout per month. I had 20 green days, 20 green days, 4 times more than what I actually needed, and I waited.
So by delaying the payout, delaying the gratification, the payout was actually bigger than it probably would have been if you would have taken payouts or tried to take payouts earlier.
And the buffer was there.
Well, let me give you my example. I'm up 8,500 from top one already on only 3 accounts I've had, but I took a payout on an account and lost it within 2 days. Took the second payout, lost that account too. So because I'm chopping into my buffer maybe too much, and then overconfidence, you're super green, you end up further away from the goal of having a live account with top one futures. I do. So it's like I'm not delaying the gratification enough based on your example. Would you agree?
I would agree.
Right.
Yeah,
so it's a great point.
And I've done that several times. Like I can't tell you how many times I would take out a payout and then blow the account. Like I haven't written down or articulated it just yet how that is. It's almost like when you take out a payout and the amount in your account changes, your mental capital still hasn't matched your actual capital.
Correct.
And your mental capital and actual capital need to be on par with each other.
When you say mental capital and actual capital need to match each other, someone's listening and they're thinking, how do I even gauge where my mental capital is at?
Yeah.
So maybe let's take a rabbit hole from prop firms away into psychology here.
Yeah.
How do you know where your mental capital is at? Maybe is it different for a new trader versus an experienced trader?
I would say the way that you can tell where your mental capital is how much you can handle before you blow up, or how much you can handle before you start experience emotional volatility.
So this is like emotional bandwidth is what we're talking about.
Yeah, awareness is key here.
Awareness
you need to know how you're feeling. You need to know if you're feeling any type of fear, because all type of trading errors, right, all derive from either fear or greed, right? If it's perfectionism, if it's recklessness, if it's fear of loss, if it's fear of missing out, whatever it is, it derives from either one of those emotions, right?
Sure. Yeah.
So you need to figure out if you're more so of a fear-based trader or more so of a greedy-based trader. I'm more so of a greedy-based trader. I'm okay with taking risk full porting.
Well,
right?
you don't get a 37K month without being risky.
Yeah,
yes,
exactly.
For sure.
Yeah. So you need to know who you are as a trader.
Yeah.
And it's, to answer your question as far as the mental capital, if you know that you can't, well, if you have never handled, let's say, a $5,000 account and you're most likely to blow up before you reach that $6,000, your mental capital is only at $5,000. That sounds like you need a strong trading coach, right? That's what that sounds like.
That's such a good tagline for your business, bro. Like, you need a strong trading coach. Welcome to Strong Trading. It's such a good one. No, but you're right. So then now take that question a little bit deeper.
Yeah.
How do you build mental capital as a trader?
Yeah. I think that one is going to come with time and experience first and foremost.
Okay.
Second thing is you're going to need a coach in a lot of journaling. If you're doing this by yourself, a lot of journaling. And a lot of people, when they talk about journaling, they normally talk about post-trade journaling, right? Like, what was the technical analysis? Did you follow this signal, this indicator, this price action, this whatever it is, right? They only talk about the technical side. But me personally, I would say to increase your mental capital, the most important journaling that you can do is intra-trade journaling. During the trade, inner dialogues. What are you thinking? What are you feeling? If you're in fear or if you're trying to be greedy, what market conditions, events, actions triggered those feelings that you're having? So you can be more aware of it. The more you build your awareness, the more that you can identify each emotion.
How it's making you turn.
How it's making you turn. And exactly what moment did you turn?
That's what I'm saying. Because you complimented me, I think, on this when you were on the stream last week. Because you were like, oh, I see you making notes on the chart in real time. When I'm short, it pulls back to VWAP. The buyers defend it. I put a note on there. Okay, this is telling me buyers are not here yet.
Tanner sweet.
But then if you asked me 2 hours even, let alone later that day, what were you thinking in that moment? I'd be like, I don't remember.
Yeah.
Like, I have too many thoughts in a day to remember.
And
so
I know
without the journaling,
you've been doing this for a while because of that.
100%.
Yeah.
100%. Because I don't want to forget. Because then when I get overconfident, I find that I want to go back sometimes and see like, okay, well, once I get overconfident and I start to then lose, what turned? Like, what did I start doing differently?
Exactly.
And a lot of the time, I start to bend the rules a little bit, which tests my emotional capital. Maybe I start trading pre-market when that wasn't working, or I start just trading an Asian session when that wasn't what was getting me there. So that overconfidence spills over, and I want to be able to journal and go back to the exact moment that, like, what day was the first red day after a 17-day green streak like I had this month? What happened on that red day? What was that first trade? And then how did I not react well in that first trade because of overconfidence? So just to finish this point, how would you tell a trader who's struggling with overconfidence in a way like me? I get payouts, I get overconfident, I lose the account. How do you fix that?
How do I fix overconfidence? You know what's crazy? I think for me personally, I've lost so much. It's like a constant reminder of, one, the lowest point you ever been in, and two, to understand that all it takes is one day, one trade, right? Like, that's all it takes is one trade to ruin everything that took days, weeks, and months to build. You almost have to have a constant reminder of those terrible days, those really dark weeks, those really dark months, whatever the case may be. You need to remind yourself you can go back there just like that.
How do you do that? A picture of the bank account when it's at negative, put it on your frame, right? Everybody wants their $1 million check on the wall, but maybe you're saying frame your negative bank balance and remind yourself of where you can be.
Frame your negative bank balance if need be.
I like the idea too of take a break. Like, I think everybody wants to take a break when they're burnt out, but no one talks about taking a break when they're doing well. So like, I look at myself, and the way I try to coach myself is like, today I didn't trade. Tomorrow I won't trade. Take a break, right? Ran really hot, started to take some red. I'm still okay this week, having a great month. Call it. Just get some time off the chart. That seems to help me. What do you think of that?
So I fully agree with you first and foremost, right? And it's funny, I actually made a tweet recently about that, and I said that wins and losses, winning streaks and losing streaks should have the same respect. Whenever you're on a winning streak, you need to take a break. Whenever you're on your losing streak, you need to take a break, because at the end of the day, trading is a performance-based activity. What is the most, if anybody played any sport, any type of competitive anything, they know that the recovery phase is the most important part, hands down, when it comes to any type of performance-based activity. So if trading is a performance-based activity, why are we not implementing these breaks within our trading system or our trading schedule?
Right. Even when you go to the mental capital question, building that, like you answered, takes time in the markets and like awareness of what you're doing through the journaling. That builds the mental capital muscle. Without letting that muscle take a break and not think about trading for a little bit, how do you expect it to grow? Like, how much more excited and motivated do you come back after a long weekend and being green the week before and the month before, versus like when you're burning it out, burning the candle down to the end, you're red, you're tilting, you lose your accounts, and then you got to take the weekend to sit with that.
That's true.
You know what I mean?
Yeah. And actually, it's funny because my coach, me and her was sitting down talking about my trading cycle. Like, I have a trading cycle. So the way my cycle goes is my flow state. In my flow state, I'm very nonchalant. I don't care what happens. I don't care if it's a win or loss, and that's where I perform my best, right? Then from my flow state, it turns into emotionally involved, where the more I trade, the more I'm investing, my emotional capital is starting to come down. My emotional capacity is starting to come down. I'm involving myself more. I'm getting more invested. Therefore, my emotions are more involved. And then when losers start to hit during this state, then I begin to go on tilt a little bit.
Right.
So
which makes sense.
Then I start going tilt, right? And then I go on tilt. I blow the account. I'm into forced recovery. I want you to force recovery, and then I go back to not giving a fuck no more, flow state, and that was my cycle. So now we were working on a piece where we need to remove the tilt by taking that forced recovery and making it voluntarily
and doing it before the tilt ever happens.
Yeah.
Oh, so that's good. So even the verbiage of forced recovery versus voluntary recovery as a trader, that's good. No one said that on the podcast before. That's real good. I like that.
Yeah.
We talked about self-regulation with our podcasts in Miami. I've had Nick Stewart in here a couple weeks ago. He talks about that. So you've touched on this idea of like self-regulation. Do you want to give any tips to the traders that are maybe struggling to regulate that internal emotion? They can relate a lot to what you just said. Any tips of like real tactics? Like, are you a meditate guy? Are you a go sit by the beach and stare at the sunset guy? How do you learn to build emotional regulation as a trader?
So for me, and I'm gonna touch on this. So when you said self-regulation, right? Yeah. The first thing that came to my mind was discipline.
Right.
And a lot of traders, they throw that word discipline around, right? And I have a problem with that, because I think that if you have to be disciplined, then you're not being. That's not who you are. That's not your identity, right? You need to, in order to trade without friction, to follow your plan without any type of internal friction, without even combating yourself, trying to follow your plan, and you really have to try. If you really have to try, that's not an identity. So what do? You have to journal a lot. And I know that it sounds vague, and I'm gonna go into it, but the reason why you want to journal a lot is because you want to bring your awareness, and you need to know why. That's the thing. You have to ask yourself why 3 times. Why do I feel this way, right? If I sat here and I pinpoint anything, any type of trading error, I would say it always goes back to some type of insecurity, right? So when we trade, we're trying to make money. Why are you trying to force the money? Because you're insecure. If you truly believe that you were a successful trader and you were going to be a millionaire and you were going to be financially free and all this type of stuff, you would sit back, relax, and chill and just do what you need to do. But because you know that you might not actually make it, you feel like you got to force. So you need to figure out why. You need to write these things down. Like I said, what are your triggers? Why are they triggering you, right? What are your angels and what are your demons? One of the things that I told one of my clients is, a lot of us, we avoid our demons when we need to make friends with them, right? When we're sitting here trying to contemplate if we should do the right thing, or if we're sitting here not trying to overtrade, not trying to over leverage, not trying to do these different things, stop trying to ignore it while it's knocking at the door. Open the door, try to figure out what it wants. Why do you have these urges? And once you sit down with your demons and try to figure out what they want, you'll realize that your angels and demons have the same goal for you, which is your best interest.
Absolutely.
They're just going 2 different paths, and you need to get them aligned. But you can't do that if you don't know your demons well enough or give them a positive role in your trading system.
Even just paying attention to them. I think that's so well said, bro. I think accepting my demon of wanting to be right sometimes more than I want to make money, which will have me fighting trend when I shouldn't be, right? Simple things. Accepting it and knowing that I have that flaw, if you want to call it a flaw, in myself to want to fight the trend and just be right instead of just ride the trend and make money.
Yeah.
Accepting that has made it easier to not give into it.
Exactly.
I know I should go short here because we're selling off.
Yeah.
But I want to buy it. But being aware of my wanting to be long slows me down enough to be like, well, just do the right thing.
Yeah.
Because then you get burned enough trying to be right, trying to do the wrong thing, listening to the devil on your shoulder.
Yep.
And then eventually you get the callus and you go, okay, time to listen to the angel on my shoulder.
Yeah. And you got to cater. You got to cater to those emotions too.
Yeah.
It's not like you're trying to force it out or trying to be super disciplined.
No, because then it'll be worse. It'll blow up.
It's like a kid with temper tantrum.
Exactly.
Right? You got to cater to the kid. You got to send out, try to understand, why do you feel this way? What's going on? What are you trying to do here? Okay, I understand what you're trying to do. This is what we're going to do. Talk to yourself. Be kind to yourself. Forgive yourself.
Traders are very hard on themselves.
Very hard on themselves.
I've had so many people in the Black Shirt Club where we spend weeks not talking about VWAP, but talking about how they talk to themselves and why they get so mad after they lose a trade. Yeah. When in reality, as we talked about in Miami, you don't know the outcomes of these trades. You're just taking setups.
That's true.
When you start to get rid of that, I don't like you said, flow state of like, I don't care about the outcomes. I'm just in the flow, taking my trades, doing my thing. That's when you normally see the best results, which goes to your point as well about why we see people with a lot of money do well in trading, because they're already financially well off. They're just trading to trade well rather than trading to pay rent.
Yeah. If you actually sit down and you trade for the activity of it, like I said in our last podcast, I told you, like, money and trading really has nothing to do with each other.
If you can get that, you'll be good at trading.
Yeah.
But
It
when you're
really
first
don't.
new, people that are new are like, what?
Yeah, exactly. Like, of course it do. But like I said, it's like if we sat here and we started playing cards, playing Uno or something, but we're playing $1 a hand, the money is now attached to it. But I like to play Uno just to play Uno, bro. Like, if I play basketball, every shot that I take, do I got to attach $1 to it? No, I like playing basketball or whatever the case may be. Right. So the activity of trading really has nothing to do with money, bro. Like, it's just, you got to love it for what it is.
100%.
You know, stop trying to, like, take and actually, like, give and try to, you know, be the best you.
You mentioned that you have a coach.
Yeah.
The coach, we started the podcast talking about your coaching program, right, everybody?
Yeah.
And now we just get to the coach has a coach.
Yeah, the coach.
Talk on that point for a second.
Man, so it's actually crazy. So my coach, our sessions are very intensive. Like I spend maybe, now I think about it, first I thought it was like 24, but I think I spend close to $30,000 a year on coaching. And that's pretty modest considering a lot of people. But my coach, she's phenomenal, by the way. She's phenomenal. I love Sarah dearly. And yeah, man, she just works with me. We sit there, we talk about all of my traumas, childhood things. Like, because the more you clear up your mind, trading is nothing but a mirror, right? The more righteous you are, honestly, I'm not saying it in a religious type of form or, you know, good or bad or anything, but the more righteous you are, the less ego-filled you are, the less greed you have, and just not even have to be humble, but just humility, right? And just peace. Don't have to be happy, don't have to be sad, just peace and just chill. The better your trading will be. So once you start untangling all this internal friction inside of you, and once you start to understand yourself and have that higher self-awareness of why you act the way you do, good or bad, and why you respond to certain things, then, you know, your trading will reflect that. Like, hey, yeah.
She's very psychology based.
She's very psychology based.
Not
looking
at charts.
We almost never do.
Well, it's just such a touchy subject because people listening to this are going to be like, how does that help you with trading? Like, I get what you're saying. Like, I think clearer. I get over that my dad beat the shit out of me. Too? You know what I'm saying? Yeah. But how do I make more money from that?
Let me touch on that too.
Yeah, because they want to know. I'm sure everybody's like, keep going on this.
So I'm going to tell you guys right now, for the longest time, I've traded simple chart patterns. Double top, double bottom, bear flags, nothing, naked charts, no VWAP, no indicators, nothing. And a lot of times I would, like, for example, at the seminar, right? Mm-hmm. Like, you guys talked about VWAP and, you know, retracement this and all these different things and different tactics and they all work, but I had no idea what a lot of people that I was talking to, they're trading, I had no idea what they were talking about, bro. It's just like, I just see a shape on the screen and I just take the trade, but because I'm able to stay in the trade, not interrupted, and do it day in and day out, you know, I was grossing in payouts more than, you know, probably 90% of people there.
Yeah.
Right. And I was watching this dude on YouTube, right? And what he did was he drew key levels and he just was backtesting. He pressed play, he paused, he did a random long or short, and he did that about 20 times. And because he was consistent and he had a stop loss, he ended up being profitable. He didn't even do anything. Like, it was just random.
This is an old school trading idea that your entry doesn't matter. Even the side of the trade that you take doesn't matter if you know how to manage the trades correctly with a system.
You manage your risk and your psychology, brother. You can almost do anything.
Yeah, I think you get that the longer you trade. But your point about you trading simple patterns is what? That, like, you don't do anything overly complicated. You're a simple guy and you still take more money out of the market than everybody else because you've worked through this psychology stuff that a lot of people are still blocked by.
Yeah.
And you think that's like childhood insecurities and stuff like that, childhood trauma. You really believe that?
I do. I truly believe that.
I want to know from the commenters, like, what do you guys think of this? Because I think this is like a super important point. Because I agree with you. I'm not asking to take the other side here. I will do that. But in this case, I do agree with you because I think trading performance, the outcome of that performance is dictated by how you are treating yourself, how you're speaking to yourself,
Exactly.
like you performing at your highest level.
Yeah,
you know
exactly.
what I'm saying?
And
Because
being
you
your
will
highest
think
self.
clear. Because if you've traded long enough, I feel like we've all had those days where like you see the market super clearly, beautiful setups. You're like, how do I not do this every day?
Yeah.
But then you have other days where you don't see the market clearly.
Yeah,
You know,
exactly.
and it's about handling those days and trying to push through those days. I think.
And you know what I think it is?
Yeah.
Because I love this conversation.
Yeah,
I'm going,
because it is important.
Yeah, it is, man. So basically, you heard of the finite versus infinite game by Simon Sinek?
I know Simon. I don't recall that all the time. I explained to me.
So basically, I kind of created a white paper, and I need to make a YouTube video on this. But we're bringing a finite game mindset into an infinite game. So a finite game is a game that the way you win is pretty much like a sport, right? The way you win, whoever can get to this goal first, who has the most points by this amount of time,
Sure.
right?
Sure.
Normal game. And they're known players, like we know who's on the teams, you know, and this is how you win the game, right? Where infinite game, that's what we're talking about, business, life, relationships, where the goal or the objective of the game is to stay in play forever. Like if you're married, you don't want to divorce. If you're living, you don't want to die. If you're trading, you don't want to blow an account, right? So the whole objective and how to win the game is to stay in play forever, okay? So we take this finite mentality of trying to win, right? Thinking of wins and losses and trying to beat a score or something like that. And we get very hard on ourselves whenever we lose a game, right? Like if it's video games, sports, whatever.
Yeah.
And we take that mindset because that's how we were raised. That's how we were brought up to play games, finite games, sports and stuff. And we take that mindset and we bring it over into an infinite game where it's not about winning and losing. It's about staying in play. It's about probabilities. It's about taking the best shot over and over and over again. You might miss some, you may win some, but stay consistent. And that's what that is to me. There's a friction because the way we were conditioned growing up, playing games and competitive sports and stuff, and we take that mentality and we bring that over to the trading arena, and now we have to reprogram and rewire and unlearn everything that we did, just like school too, like getting grades and stuff like that.
F is failure.
F is failure.
Right,
A
which
is
is
great. And
right.
you take this and you bring that over to trading, and that's not how business works. That's not how
it's not how you
trading
make
works.
a long-term trading career. Because what you're
exactly.
making it sound like is like the guy that takes the finite game. He's trying to hit the home runs. He's just trying to hit the trade. I'm a winning trader now.
Yeah.
Well, no. You have to show up tomorrow if you want to make more money. So it's like it becomes much more of this journey is the destination. I say that all the time because I feel like that clicked with me a few years ago as an entrepreneur of like, okay, unless I'm building a tech company and I'm going to sell it for $80 million or something like that, the journey is the destination. You want to build an entrepreneurial like path that becomes something you don't want it to end.
Exactly.
Yeah, you just want it to be kind of straight up.
That's the infinite game.
That's the infinite game. Yeah, this is why trading psychology gets a bad rap. I really think it does because like look how long it kind of takes to sit through and get through some of these ideas to get down to like analogies and examples that are tangible like that. But I think if people can sit through it and try to persevere through that, another roadblock really, because really when you hear trading psychology stuff like this, like because people are tuning it out sometimes.
Yeah.
When they hear that buzzword trading psychology, those people are probably the ones that need to confront themselves as much.
Yeah.
Yes,
sure.
bro. Yeah, exactly.
Yeah. We're not boomers, bro. We need therapy.
We need therapy. Yeah. So payouts for a second. You mentioned the 37K month.
Yeah.
Talk to us, and that's with the Topstep. So talk to us about the other firms you trade with.
Yeah, so Topstep, and I'm with Blue Sky right now.
Yeah, that's it. Just those two.
Yeah, just those two.
Not live with Blue Sky.
No, not live with Blue Sky.
Do they do live accounts?
What's crazy? I don't know. I know that they do daily. They do daily payouts though.
That's okay.
That's why I rock with them.
Yeah. We love daily payouts.
We love daily payouts.
So was that a challenge or was that a straight to funded?
Challenge.
Right, because you hate consistency rules. You're not going to do a straight to funded.
Yeah, yeah, exactly. I hate consistency rules, but I'm cool with them too, though. Like I'll take them.
I hate them, but I'm cool with them.
Yeah, I'll do it if I had to.
If you have to, but you're going to
to,
able that. You'd rather take a challenge with no consistency rule, pass the challenge, and
exactly.
Okay.
I'd much rather do it because the challenge with Blue Sky, I did a 100K account. You have to make $6,000. I think $3,000 max drawdown, and then after that, you got to make an additional $3,500.
Oh, really?
But that $3,500 goes to your sim funded account.
Oh, that's good.
Yeah, and
so it's kind of like a phase 2.
Yeah, it's a phase 2.
Yeah,
exactly.
Back from the Forex days.
Yeah, I never traded Forex.
No, I know, but like when we used to do the Forex prop firms, everything was phase 1, phase 2. Even some firms had 3-step challenges.
That's annoying.
Bro, the prop firm game has changed so much, so fast. When you just look at the last 2 or 3 years even, it's changed so much. Between Blue Sky and Topstep, do you have any like major tips you would tell the audience to look out for when trying to pick a prop firm from them? They know those firms, I'm sure. They've heard of me talk about Top 1 Futures. They know Tradeify, right? Like I've had Brett on the show. I've had Clay on the show. So I've interviewed, I had James from Take Profit Trader. What would be your tips to people of like how to pick the right prop firm for me? Because they don't want to start with personal capital, even though you're right. And they should take the prop payouts and start a personal account. Before that, let's go back to the guys that are still in prop land. How do you squeeze that?
So for me, there are actually 3 prop firms that I like right now. I'm only trading 2 out of 3 of them, but it's Blue Sky, it's Topstep, and then Trade Day. I haven't started Trade Day yet. And the reason why I like these three prop firms is because they're either daily payouts or up to 5 days, right? There is no consistency rule, right? And it's pretty much a straight shot, clear understanding to fund it for the most part, right? I don't really like the whole 10 to 14 days to a payout. I don't want to take only two payouts per month unless I want to, right? But I want to have the option to be able to take out whenever I want, even though I only pay myself out like once, maybe twice.
You just want to know it's there. If you decide
like
you have a bad day, you're like, I'm calling the month, I'm taking the money out.
Exactly.
Got it.
Exactly. And sometimes I might have a bad day and lose some money, and I might still give myself a payout.
That's
like
what I'm saying.
Exactly. Yeah. That's what I did on my Top Live
I did
account.
the same thing.
Yeah. So, I just think that you should be able to get paid out as frequently as possible. Like I said, no consistency rule, straight shot. Yeah, they may have some challenges, but get the challenge out the way. And if you're trading just for the activity, you don't really care how long it takes. Just get it out the way.
Right. And you take a lot of perspective. Sorry to cut you off. You take a similar perspective to Isaac, right? Like he was like talking about that at the seminar and in the panels where he was saying like, pay yourself as little as possible, go to live. So you have the Topstep live account. For people listening that want to move to live with any prop firm, what are the keys to going from prop challenge to prop live account?
So, and everybody has their own take, but I think for evals, right, I try to get my evals out the way as quick as possible. So say, for example, if I do a 50K and I need to make $3,000, right? You got to know the stats of your setup, of course, but I'll risk $500 to make 1,000 each trade. But it has to be A+ high probability setup, right? So I'll risk 500 to make 1,000. I do that for 3 days in a row. I already passed the eval, right? And then after that, I size down when I get to my XFAs, right? So I'll only do 3 to 5 micros, and then I just slowly grind. For the first 30 days is the hardest. So 3 to 5 micros. Honestly, I tell my clients 2 micros, but I've been trading for a little bit, so I'll do 3 to 5. And I will grind for 20 trading days, maybe even 30 trading days, no payouts to create that buffer. And then at that point, I'll take 10% of whatever I make, right?
That's it.
And 10% of whatever I make, and then I'll do maybe another 10-day stretch to 14-day trading stretch, and then that's when I'll start taking max payouts. Because once you get a certain buffer, like for example for Topstep, for live funded, they only allow you to transfer over the highest account that you have. So if you have a 50K, you can only transfer over 50K. So if I'm copy trading 5 accounts, right, I can only go $10,000 per. So with $10,000, that's a big buffer. You can make it to 5,000 pretty quickly, and you can only take out 5K per account max. So now you have 25K every week and a half, right? Because the more buffer you have, the more you can leverage, the more you can risk. You'll get to that 5K quicker, but that came from that slow grind, that first 30 to 40 trading days. If you can just fade the first 30 to 40 trading days, be very patient, after that, 25K payout, 25K payout, 25K
What kind of
payout.
win rate over those 30 days are you looking for? Let's talk about actually not trade win rate, like green days. Out of the 30 days, how many can you have red? Like, what's the key? Because for me, I can't have big red days, or that won't work. If I can avoid the big red days, I will get what you said. I've done what you said.
You're a win rate guy.
So what is your perspective on this?
So for me personally, I'm an R multiple guy. So, and the reason why I prefer, like, of course, win rate matters, right? But I think that I'll average like around 50% win rate, but I always go for 2R, sometimes more if it's a whole psychological number, right? So it'll give me like that 2.5, maybe that 3R, depending on market structure as well, or whatever, liquidity levels, pivot points, stuff like that. And basically, like I'm an R multiple guy because I have to make sure that when my red days come, they're buffered. Right? Like I'm counting for my red days coming.
So you're looking at like, I'm going to win and lose.
Yeah, I need to win big today or do a 2R at least of my wrist. So when that red day comes, I'm good to go.
You got like what? On a good week, 3 green days, 2 red days?
Yeah, I would say 3 green days.
That's a good week?
Yeah.
I mean,
3.
at 2R on
sometimes even 4, honestly.
Right.
Yeah.
But you're going to have a red day almost every week, you think?
Guaranteed.
Yeah. And you do well at
Guaranteed.
controlling that
Yeah.
to still stack for the 30 days to then get to that buffer zone.
For sure. The last time that we did the podcast, when we did our podcast, I was on a almost 2.5 week losing streak. Not all of them. Not every day was a loser. Not every day, but I was in drawdown.
Yeah.
For about 2.5 weeks
On a prop account.
on my live account.
On a live account.
Yeah.
Drawdown for 2 weeks on a live account. How'd you claw out of that?
I went to the higher time frame. Because I normally trade on a 1 to 2 minute, and then I'll look at like the 5 to 15. But I started implementing the 30 minute to the 1 hourly, and then I would draw like where I assume that liquidity levels will be, and wherever, because liquidity levels literally price gravitates towards those things. So I would start out the session looking at those levels, see where price opened up, and see where it like gravitates to. And from there, after I see momentum on the 30 minute or hourly, I would jump over to the 1 or 2 minute. That will let me know that if the 30 minute or the 1 hourly is catching momentum, the 1 or 2 minute, I'm avoiding chop in ranging conditions. So now we're trending. And then I look for my entry model. I enter, and then I go back to the 1 hour or 30 minute, and then those liquidity levels are my profit targets where I start to scale out.
So you just slowed down a little bit.
Yeah. So now that I'm looking at the 30 minute or 1 hour chart, I'm only trading once a day, maybe twice.
Right.
So once that's the thing. Whenever you're in drawdown, you don't want to trade more. You actually want to do the complete opposite and trade less. How about that, right?
Yes.
So
absolutely.
Yeah. And then I also reconvened with my trading coach and started talking to her about it and stuff.
Would Topstep say when you were in drawdown on the live account? Did they call you like, yo, what's up? Nothing.
No, because it wasn't crazy. I think I was losing probably between 650 to maybe 800 a day, maybe 1,000 if it's real bad.
So it's not bad.
No.
What's the biggest loss you've had yet?
Period.
Yeah.
No, prop account or my actual money?
Whichever one you want to give us.
Okay, so the prop account.
The people want the big numbers, Lawrence.
Yeah, of course. Yeah, the prop account. I went on tilt real bad one day, Austin. I think I lost, like, with copy trading included, all of that, like 50,000. Yeah, blew the whole thing because I couldn't stop. I couldn't take the loss.
Over trading.
Yeah, over trading, over leveraging, trying to get, because I had such a big buffer that I thought I had space to keep on minis, right?
No.
Yeah.
That comes quick.
Yeah, and it comes quick and took everything out.
50K in a day.
Yeah, man.
Was that XFAs?
XFAs.
Yeah. And that sucks because you probably worked some time to build that buffer, and then
absolutely
one day.
I would have been at live quicker if I would have kept those accounts. Like this live was the set of accounts that I bought after losing 50K.
What did that loss teach you? Like when you sit back and look at it, what do you think about now? Like, did I really learn anything? Like, I kind of knew I'm a degenerate and I have that in me.
Yeah.
Like, I know I can tilt and do that. So what did you learn through that? Because it sounds like your strategy is solid.
It
like,
is.
you know your entry model. You know the trades you're going to take. Yeah. So how do you pull a lesson out of that?
Yeah, just to be completely transparent and candid here, bro. Like, I found out that I was just like looking for redemption, trying to like redeem myself for the mistake I made because I didn't forgive myself from the first couple trades, and I just wanted to, like, whenever I mess up, I'm like, I got to try harder, and I want to make it up, and I want to make it better, and just that redemption and just trying to sometimes when you break something, you need to leave it alone.
I mean, you said it best right there, bro. You got to forgive yourself. That's the problem, is if you don't forgive yourself, you hold on to the weight of those losing trades, and that weight, you can't see straight. It's pushing you down. You can't run correctly because you're carrying the baggage of losses that are actually already gone. You already did it. So you think, of course, in hindsight, it's easy to say, just let it go, bro.
Exactly. Or it's okay, Austin. How about that? Like, listen. It's okay, bro.
That's where a good coach helps, bro.
Exactly.
That's why I have all my guys check in with me at the end of the session. Like at 11 o'clock, you should be hitting me up. Hey, where are you at on the P&L? Like, we should be checking in.
Yeah, exactly.
Yeah, because when you go
That's
Rambo,
yeah,
it never comes out good.
It doesn't.
When the guys go quiet.
Once you're in, it's virtually impossible to get out. Once you're in, I always tell my clients that, like, they be like, what do I do? I'm like, preventative measures, because once you're in, it's virtually impossible. Once you're tilting, you're screwed, bro.
You're screwed. You have to literally throw the laptop out the window. It's probably a better bet.
Yeah, and you might go out the window with it.
You're right. Okay, so that was the prop. You want to share biggest loss on personal?
24,000. That was the Honda Civic.
Oh, right, you told that story. Yeah,
metal options.
Yes,
yeah. I made like 30. I think I made like 30-something thousand, $30,000 a month for like 4 or 5 months straight, and I just knew that I could not lose. That overconfidence that we're talking about. I played meta options. I only played spy options, but I wanted to test my hand somewhere else, and I just kept on buying, averaging down, and next thing you know, $24,000 in my actual money was gone in one day.
So what are the two similarities from the biggest prop loss, 50K, biggest personal loss, $25,000, right? I mean, you add those together, bro, it's a nicer car than a Honda Civic.
It is.
Right? You look at those losses, what are the similarities between them?
Yeah, what are the similarities?
Yeah. Over trading.
Not
stopping.
Over trading
when
not
you were
stopping.
tilting.
Yeah.
Right? So it's like, even just those two similarities stand out to me the way you describe that, because it's like, you're your own worst enemy. Everybody listening to this, the trader is the problem. It's not the market.
That's true.
So if you can start to be aware, as we've talked about for an hour, of your own emotions, your own faults, your own insecurities, and accept them, you actually can get okay at being
Once
a
you
loser.
have a profitable system, you're the weakest part of your system.
Exactly. And then you just accept that you're going to lose sometimes. Be a good loser.
Exactly.
You actually will get out of your own way.
Yeah.
But if you are like in those moments when you're adding in and doubling down and I got a buffer. I'll be right. Look how right I've been all month, bro. I'll be right in a minute. Just let me keep going. In those moments, I think that's where a lot of people break.
Yeah.
But if you can come back from that like you have, you become almost like indestructible, because that is the essence of becoming a better loser.
That's true.
Losing and learning from it and then not doing it again and having it happen further and further apart. Those are the essence of, I think.
You're right. And I want to touch on that too. Like I want to drop a gem because I want to give as much value as I can here. But how to be a better loser, right, is you have to give your losers a positive role in your trading system. So I dropped a message in the chat with all of our traders, and I told them, okay, I'm over here backtesting, and I realized I have a winning model. I have an edge, right? Something that'll allow me to win trades, but that's only half of my system. I'm missing another half, which is my losing model, right? How do I lose? What's the losing expectancy? Like, how can I be a great loser? Like, for example, if you trade your setup, your winning model, your edge, and you have a guideline based on that setup, how well you executed, how well you performed. But if you don't have a baseline, a guideline, a losing model, how do you know how well of a loser you are? 100%. How can you be a better loser? So create a losing model. Like, figure out at what point is the market irrational relative to your plan.
Yeah.
You're right. At what point is it not your fault, but it's actually the market is just not aligning?
Yeah,
right.
That's how I talk about it.
So you need a losing model.
You need to. That's great, and that's why journaling and marking up those trades, like we were talking about, makes a big difference. Because when I see a trade, I took a trade yesterday, instantly against me. My losing model looks like that. When it goes instantly against me, I'm not just break even or in profit. I'm instantly wrong with a strong move. That's not a winning model.
Yeah.
Now I'm identifying it. I can cut that trade quicker and lose less.
And if you look at your stats, like for me, from my stats, I know that my trades should be winners almost immediately. If I'm on trade number 2 or number 3, I need to hang that shit up. Like,
that's what I'm saying.
I need to hang it up, bro, because I looked at my stats. I got a lot of my biggest green days are one trade days.
Yeah. I think a lot of people would say that. And then the opposite, of course, their biggest red days often have a lot of trades. Yeah.
Yeah.
We have to crack the backtesting nut. We've touched on so many good topics, everybody. But we have to. So we got to talk backtesting.
Let's do it.
We were beefing at the seminar, everybody. If you didn't know, we were beefing at the seminar.
I would have won.
He would have won. You made me realize I needed to have microphones in the audience, so we could have gotten that on film. Because on film, it's me just standing there and dead air. Like you don't hear you talking, so it's annoying.
I had some great questions for you guys.
You did. It was. I think everybody really actually liked that part of it too. They liked the back and forth. I was big on backtesting. I used to sell a course that taught people how to backtest and use a spreadsheet that we built, 2018, 2019, something like that, maybe 2020. So I'm not against backtesting. But as time has gone on, I felt like I've retained more value from forward testing, taking a strategy, taking rules, marking it up in the live market and seeing how I perform with it. Where did you build your belief in backtesting? Who got you hooked on how important backtesting is? Let's start with that.
Yeah, so on Twitter, there's this girl. Her name is Yumi. It's like something Pips. I can't remember her Twitter handle.
Okay.
But
you tried to give her a shout out.
Yeah, I did. I'm sorry. Yeah, but just look up Yumi or something. It's something Pips. But yeah, so she is really big on backtesting, and I bought one of her books and I read it.
Okay.
And it actually helped me a lot because I started to, in the book, she pretty much talks about, long story short, that we are not bad traders, we're just unprepared, right? The reason why we can't think in probabilities, and what does thinking in probabilities mean? Thinking in probabilities is basically saying like, hey, I'm not necessarily a trader, I'm a scientist. What does a scientist do? They create a hypothesis or a thesis, right? They take that hypothesis or thesis, they experiment it, And then there's an outcome that comes, and then they collect data, and then they do it all over again.
That's
do
exactly
it all over
what
again.
we're doing.
And we're not traders, we're scientists.
Right.
Yeah.
Yeah.
So basically, that's what thinking of probabilities is. It's not about winning or losing, yippee, yippee, hooray. It's about data collection. It's about
Statistics.
Statistics. This is my model. This is how much it's supposed to yield me. Now let me put it in the market and see if it meets that expectancy, right? The
So
expected
this
value.
is where your interest in backtesting comes from, because you're
Exactly.
like, okay, this is all math.
This is all math. So then, I made a YouTube video called 1,000 Backtested Trades. And what it does is it actually helps you think in probabilities, because imagine the whole, practice one kick 1,000 times. Imagine doing, right. Imagine doing the same entry, the same profit target, the same stop loss. Let it run. Same entry, same profit target, same stop loss. Let it run. And you do the same monotonous thing 1,000 times on the same time frame, same setup. Do you think that you would get numb to the outcome? And then after 1,000 backtested trades, you start to see like, hey, no matter what I did, I lost some, I won some, and I did the same thing. And now I can witness and experience these probabilities play out. And at the end of it, I became profitable. At that point, your losses don't look like losses no more. They look like investments, because
Cost of business.
The cost of business, because you look at your P&L ratio and you find out for every $1 that I lose, I make $3. No, for every $1 you invest now, you make $3, because now you have an expected value. But because you didn't backtest, and because you don't know how your system is supposed to yield, what your system is supposed to yield you, what expected value, now you're going all rampant because you don't know that this is a part of the plan. This is a part of your ATM machine. It's supposed to give you these losses in order to walk through that door of winning.
Exactly.
Right? Like, no business have you ever not put money in, lost some, and then eventually got it right, and then you started receiving income.
100%.
When you take your 9-to-5 paycheck and you put it into the stock market or your 401k, do you count that as a loss? No. Now it's an investment. It's the same thing. So through 1,000 backtested trades, or 5,000, thousands, not 50, not 100, you're still unprepared. You need thousands of backtested samples to rewire your mind, not only to perfect your execution, because you're doing the same thing over, but to witness and experience the probabilities play out, so you can truly believe that losses are a part of this game, and you will be okay with them. But you have to witness and believe it. You have to experience it to believe it. You got.
I fully agree with that. Like, I think I'm better at trading my strategy than some people in the group, because I've done more markups than them. I've seen it in the live market, and I've studied it more than they have. So I'm used to seeing what these trades do.
Exactly.
And that prevents me from freaking out as much as they do.
Exactly. When things go left, you know how to respond.
Well, it's chopping. What am I supposed to do? Well, I've tested this enough. Do we have any new information? Higher highs, lower lows, anything structurally changing? No? Then you're just becoming impatient. So
That part.
the backtesting and the study, call it backtesting, call it chart study, whatever, helps you, I think, build a little bit of patience. I totally
do
agree.
want to say backtesting, because this can't get confused. Backtesting is when you go back into historical data and press play and watch the candlesticks play out, and then you press pause, enter, set it. Okay, because a lot of people, when I say backtesting, they think like just annotate a screenshot.
No. You got to make it as real as possible. Do you backtest with software, or are you backtesting by hand?
With software. So I was doing bar replay on TradingView, but then I went to TradeZella and like fell in love with it.
Well, TradeZella's got the best.
Yeah.
But you're not doing anything like on Python or C++ where you're writing code or doing anything like that.
No.
Okay, so
everything's manual.
For everybody listening, like, that just shows you how real it can be. Like, you're just gonna have to put the time in. But it's like, you want a career that's going to give you unlimited time freedom, unlimited income potential. You don't have to get a degree like a doctor or a lawyer and get passed by the state. What's your tuition going to be? Losses at first, I think. The money you invest is your tuition. But then these hours in the gym, I think, make the difference. That's why I promoted backtesting for so long. So then how do you equate the value of backtesting to live market forward testing in your mind? How do you see? Is this worthless? Is the live market testing worthless if the back testing is not there?
No, I don't think so. I think that there's a deviation between performance, right? And like I said, if you've ever been in any type of high performance activity growing up, you would know that you perform better in scrimmage than you do in live performance. So the better you are in scrimmage or practice, the better you will be in live performance.
We talking about practice?
Yeah.
Remember that Allen Iverson clip?
Oh yeah,
From back
I
in the
do
day where
remember
he's at
that.
that press conference. We talking about I'm
Practice?
the all-star player,
Exactly, I remember
franchise
that.
player.
Yeah, he did say
Yes,
that,
we're talking about practice, bro, because it's going to make you practice higher, you perform higher.
Exactly.
I agree with that.
Exactly. So with that being said, like, you have to like backtest and practice a lot, because even what Kobe Bryant said, the reason why I'm so confident is because I know I did everything in my power to prepare, because at the end of the day, when it comes to trading, 95% of your energy needs to be in preparation, and then 5%, if not less, needs to be in execution. Just like that. You are preparing for hours, if not days, if not weeks, for that first 1 hour of market open.
Which goes back to what we were talking about on the way here about streaming. A lot of the time on the stream, I'm not in a trade.
Yeah,
I'm waiting.
for sure.
And then I take the trade and it's just like, okay, now what?
Exactly.
You got to entertain people or they ain't going to watch, right?
Exactly.
That's why we do the fun stuff we do on stream.
Yeah.
So, yeah.
But off the stream, you're working your ass off.
Unfortunately and fortunately.
Yeah, for sure.
I feel like what's cool about my journey is I have markups of my first ever markups saved at home. I could send them to you in a folder, 2015, 2016, month by month on Forex pairs. And I have thousands of them. So
That's
for
beautiful.
me, I feel comfortable to talk about backtesting because you want to come at me, I put in a lot of hours. I will show you a lot of markups.
Yeah.
I might not be the most profitable trader. I'm definitely not.
Yeah.
But I put in the hours to get to this point that's allowed me to take decent payouts. And I think that a lot of people, unfortunately, want to cop out. They'd rather watch our stream and get signals and follow along. And that's why I tell everybody, you heard me on Friday. I'm like, this is not signals. Don't follow us. You're here to learn, right? Yeah. So for the listener that's thinking, why would I need to do backtesting if I can just come work with you guys at the Strong Trading and I can get the strategy? What would be your answer to that? Why do they need to do it still?
I mean, because who's to say that me and Tanner don't become millionaires tomorrow and just cut the whole thing off? What you gonna do then? But no. So
because I said so.
Yeah, right. But because first and foremost, we don't really touch on we'll help refine technical analysis mildly, but we don't really touch on that,
So you're putting the ball in their court. You're like, yo, you go do the backtesting.
Yeah.
Yeah, because it's really one of those things you can't do for people.
For sure.
Yeah, because if you do it for them, they don't. It's like when you.
I can't go to the gym and get you buff.
I can't give you a six-pack, buddy.
At all.
No, but like when you were a kid and you would do something bad in school and you'd have to write it on the chalkboard. I won't spit on the girl, right? And you wrote it 100 times. You didn't do it no more.
You didn't.
Same thing with doing markups. You do 100 markups.
And it stays in your mind.
Stays in your mind forever. Yeah, absolutely. Yeah. So backtesting, TradeZella is a recommendation. Anything else you'd recommend to the traders that are not backtesting of tips to get started or tools they should use?
Yeah. I mean, I think that TradeZella gives you everything that you need. I'm just going to go gung-ho on that. You can do trade replay on TradingView. That's what I use. What I have used, but it's nowhere near as good as TradeZella.
No, dude.
TradeZella.
And they're updating it all the time.
Man, it's amazing, bro.
Let me keep it real with you. You see all these other trading journals out there?
I see. What's the one called? TradSync, something like that. I only had one other one, but it's not.
You know what they're all doing? They all copy Umar and TradeZella, bro. That's why I'm so grateful to work with them. I know you're gonna be doing some work with them too. They've been a sponsor of my stuff for a while, bro. They don't ever entertain when people are copying them. They don't even care. They just are on to the next thing. That's why this backtesting thing is so good. They just dropped the whole new AI reports thing that the reports are now completely customizable and way more detailed.
Yeah.
So that's why I love them so much.
And that's the beautiful part about and that's the whole Simon Sinek Infinite game. He said that one time. He said that he had a Samsung phone or something, and he was with the Apple exec, and he just wanted to toy with him. And he said, man, this phone is way better than you guys. And then the Apple exec said, I don't doubt that at all, because they're not trying to be like them. They're not trying to beat them. They're just trying to be best in their niche,
right? Be
with their product.
Yeah.
So same difference. They're just focused on them. They're only focusing on themselves, and they're going to continue to go up because of that. They're not looking at nobody else.
So we talked about backtesting. We talked about prop firms. Talked about your biggest losses. Talked about the big payouts. We covered a lot.
Yeah.
Plus, we got the podcast from last weekend where you gave a lot of valuable insight on more of mindset, process, psychology stuff. So between these two, we got an hour something here, an hour and a half there. That's 2.5 hours, bro.
Pretty solid.
A lot of content. I'd like to see more short form content from you.
Yeah, I know. I need to get on it, man.
I love to see that.
I need to get
I
on
know
it,
everybody loves it when you come on ASFX TV, but you guys are going to be streaming now 3 days a week.
Yeah, for
something
sure.
like that.
Starting
so tell
Monday.
everybody what's going on.
Yeah. So starting Monday, me and Tanner here at Strong Trading, we're going to start live streaming not every, 3 days a week.
Something like that. Don't hold
so
them
you're
to
going
the
to see the
schedule
process. You're going to see us talk, have our little conversations and stuff.
Take advantage, everybody, because I told them they're stupid for doing it for free. So while they are still streaming for free, tune into their streams.
Yeah.
And you'll still be hopefully coming on ASFX TV?
Absolutely, man.
Fridays, we hang out a little bit.
Anything for you.
Oh, dude,
I'll do anything for you.
I love you, bro.
Yeah.
Anything we need to leave the gang with? We'll make sure they got links to everything.
Yeah. Only thing to leave.
I always ask at the end,
yeah.
What would you tell your younger trader self?
What would I tell my younger trader self? To, like I said, to love trading for the activity of it. Do it because you love trading. Look at the charts. You see your setup, execute it. backtest like a mad person. Don't look at any, don't add a bunch of confluences trying to be right. Use what you have and just make it more efficient. Don't try to be right. Just work on yourself. Journal during your trades. You're in a dialogue. Be mindful of what is triggering you, why it's triggering you, what market conditions, and what you need to do in order to welcome and cater your demons. But, you know, give yourself time to grow. This is the hardest thing in the world. Give yourself about 6 to 10 years. Yes, 6 to 10 years. And there's no aha moment. It's not going to all click. I quit my job 3 times thinking I was profitable, and wasn't until the 3rd time, right? And just stay consistent. Consistency. That's it.
Persistent consistency.
Yeah,
love it, dude.
Man.
Lawrence the Investor, everybody. I'll put links for Lawrence on Twitter. I'll put their strong trading website in the description. I'll make sure the stream links are below. So anything you guys need from Lawrence, you'll be able to find in the description.
Sure,
but for now, buddy.
Man, thanks for having me, dude.
I appreciate you making the trip, bro.
Yeah. All right, brother.
Everybody, we'll see you in the next episode. Make sure you're subscribed. And as always, thank you for listening.
Yeah.